Hi everybody, welcome to our DAT IQ Weekly Market Update. This is our update for January the 30th, 2024, already into the end of the first month. It's episode 279. I'm Dean Croak, Market Analyst here at DAT. Sitting in for Ken Adamo today, I'm joined by Evan Shelley from the Truck Parking Club. He's our special guest today. Thanks for being on, Evan. Great to have you with us.
Yeah, thanks so much for having me.
Yeah, you're joining us from Chattanooga today. How's the weather?
I'm actually in Las Vegas. Got a couple shows out here. Yeah. It's not bad. It's a little tad cold.
Yeah.
Maybe 40, 50 degrees, something like that.
Okay. What shows are on in Las Vegas this week?
So Roadie's Truck Stop has a conference we got invited to, annual conference, and then Manifest is next week. So knocking out both of those shows while we're out here.
Great. Tell us a little bit about yourself and the Truck Parking Club, just before we get into the market update.
Yeah, so my background is real estate. Back 2018, recently graduated college and just had a fascination with real estate and started flipping houses, and then started flipping large commercial land deals, which led to looking at industrial land deals. And I came across a deal, I believe in 2021, that looked like a good development deal for truck parking. And then the municipality told me that they wouldn't allow truck parking there, even though it was zoned industrial. But then everyone's telling me that truckers need more parking. So that led me to, it sparked some curiosity. And from 2021, for the next 12 months or so, just talking to stakeholders in the industry while also doing my real estate, and found out that maybe there was a way to get into this business and not just through acquisition of real estate, which is how Truck Parking Club was born.
Yeah, it's a fascinating concept. I'm looking forward to getting you back towards the end of the show, once we get through the market update, to dive a little bit more deeply into how you do things. I think it's a fascinating concept, one I've struggled with, even trying to find parking for my truck. It's always been a challenge. So something that affects shippers, brokers and carriers, whether it's a carrier trying to find somewhere to park a load safely, or a broker trying to get a load delivered without a service failure, or a shipper trying to keep something safe over a long weekend. It's a really important topic. So we'll bring Evan back towards the second part of the show. Thanks for being with us, everybody. For those new to the program, we're here every Tuesday, 10 a.m. Eastern, 7 a.m. Pacific. Most importantly, here to answer your questions. So get those questions in. We'll get to them at the back of the show. So let's start off with some of the key trends we're watching. Refrigerated and dry fan rates cooled last week. No surprise to anybody there. What is interesting, though, is flatbed rates increased, though, for the third week. We're going to cover that a little bit more in detail later in the show, but there is a trend there that's emerging in flatbed. Rates have been up for about the 12th week now in flatbed, a little bit of up and down, but mostly the trend is up 15 cents a mile in the last 3 months. Could be that there's some capacity exiting in the sector, and it's biting the hardest in flatbed, given how specialised it is. In the contract rate market, active dry van contract rates, that's the average of all of the dry van contract rates in routing guides, starting to soften again, down almost 1% in the last 2 weeks. Compared to the first 2 weeks of the year. Again, I think that's on track seasonally. Replacement rates based on prior RFPs are down about 5% in the second half of January compared to the first half. Demand still continues to soften. The ATA tonnage index, which represents largely the contract freight market, down 1.7% in December. Bob Costello noted that 2023 was one of the worst years they've had in tonnage since 2020. And the ISM PMI data, a good indicator of truckload demand, remained in contraction in December. New orders, though, which is sort of a good indicator of momentum, contracted for the 16th month. Remember, this is a diffusion index. Anything under 50 means contraction, anything above expansion. Jason Miller had a good post last week, not seeing any signs of manufacturing improving in the next few months, pointing to muted truckload demand. And unlikely that we'll see a turnaround in demand in the first half of this year. At this point, that's how things are shaping up. Let's dive into our market update and start with the load to truck ratio in dry van. Volumes continued or they decreased to more normal levels last week. I think the impact of the cold seemed to work its way out of the market. Spot market load posts down about 5% week over week. Within about 17% of last year's carrier equipment posts were flat last week. Load to truck ratio down by about 5% to 2.70. In refrigerated, load posts backed off again last week. They dropped by about 20% following the prior week's surge. Equipment posts, carriers looking for loads on our load board, mostly flat. Also in refrigerated, load to truck ratio down to 3.85. And in flatbed, load posts were flat last week, but still about 50% lower than this time last year. The load to truck ratio in flatbed remained largely unchanged at 8.11 loads per truck. A couple of markets worth looking at this week from our market condition index. We're having a look at Elizabeth, New Jersey. Truckload volume has recently increased in Elizabeth, New Jersey market. Imports were up about 12.5% in that market in December. That's contributing to a significant impact in the spot market, as it always does. The volume of loads moved as opposed to loads posted. The volume of loads moving in DAT's network out of Elizabeth, New Jersey were up 12% in the last week. Load post volumes were up for the fourth week, up about 20% last week as brokers are looking for capacity. Elizabeth market last week was the number one spot market in the country. Average outbound line haul rates are up 7 cents a mile to $1.49 after decreasing for the prior 3 weeks. And in Chicago, rates are up 5 cents a mile to $2.17 and have steadily been climbing since the start of December. Good news for Midwest carriers there. The volume of loads moving in the Chicago market up 11% year over year. Spot rates are up 5% year over year. And in refrigerated, again, the Chicago market took the number one spot for load post volumes last week with a 3% market share of the national total. Even though load post decreased 25% last week following 4 weeks of solid gains. Available capacity remained tight. Reefer line haul rates were up 7 cents a mile in Chicago to $2.57 for outbound loads. Remember, folks, these are line haul rates excluding fuel. The volume of loads moved was around 2% lower than this time last year. Line haul rates are closer to 3% higher. And in rain-soaked California, there are areas where the USDA reported a shortage of trucks. Outbound spot rates in the popular Salinas-Watsonville market up 14 cents a mile to $2.28 a mile last week. And lastly, in flatbed, having a look at the Baltimore, Maryland market this week, the Baltimore market took the number 2 position last week with 3% of the load post market, slightly behind Montgomery, Alabama. Baltimore is the number 1 port on the East Coast for RoRo, roll on, roll off, and break bulk. Imports were up about 8% in December. There's been a huge surge in flatbed volume in our market. Rates are up 14 cents a mile to $2.40. At $2.54, average outbound Maryland rates are the second best in 7 years. And we've still got about 8 weeks to go before we start to see the peak in machinery imports into the Baltimore, Maryland market. And wrapping up our market update with our year-over-year look at spot rates, dry van line haul rates were flat last week, remaining around $1.74 per mile. Compared to last year, line haul rates are about 5 cents a mile lower as the market starts to cool down a little bit from the surge 2 weeks ago. Based on the volume of loads moved on DAT's top 50 lanes, they averaged $2.03 per mile last week. That's 29 cents a mile higher than the national average, $2.03. And in refrigerated, although the national average reefer spot rate dropped 3 cents a mile to $2.11 last week, there were pockets in the reefer market where trucks were in demand. USDA is a good proxy for truckload demand in refrigerated. There was a slight shortage of trucks, again, in the Pacific Northwest for onions, potatoes, and winter vegetables. And interestingly, in 4 of the 6 produce regions in California, there was also a slight shortage of trucks. But again, I suspect that's due to the heavy rains that came through that state last week. Refrigerated spot rates are about 1 cent per mile lower than this time last year. And compared to the start of 2020, when the market was oversupplied with capacity, line haul rates were about 15 cents a mile higher last week. And lastly, in flatbed, flatbed spot rates remained just over $2 a mile last week. They averaged $2.02 nationally. That's up about 2 cents a mile last week. Still about 7 cents a mile lower than this time last year. And compared to 2020, about 15 cents a mile higher. So that's it for our market update this week. The long form version of today's report will be published this evening. You can go to dat.com/market update and download our weekly report. So with that, let's dive into our short-term forecast. Let's start with dry van. For those new to the show, the color coding looks like this. The blue line is a rolling 7-day weighted average of historical rates. These are loads moved over 550 miles, so true long haul forecast. This excludes fuel, so they're line haul over 550 miles. Our flagship ratecast model, which is in all of our products, is green. The red line is our short-term model. That more heavily weights data seen more recently, and the yellow and grey are blends of the two. So let's start with dry van. Following the market impact of the extreme cold, this week we're seeing some model disagreement in the next 2 weeks before they start to align in the second 2 weeks of the period. The short-term model expect rates to drop back another 5 cents before picking up again mid-February. There's some agreement towards the end of the forecast range here as we start to get into the quarter. I suspect the short-term model is going to be closer to where we go. I'm not sure. I think the ratecast model is being a little bit optimistic here. In refrigerated, there's more model agreement, as you can see here, with the forecast expecting line haul rates to decrease around 5 cents per mile, not a significant decrease over the next 2 weeks. And again, they start to climb again. It's a little bit early for rates to be picking up ahead of produce season, but we'll have to see how this one pans out here. But there's definitely model agreement that refrigerated line haul rates will start to improve in early March. And lastly, in flatbed, Ratecast is expecting rates to decrease slightly over the next 2 weeks before starting to climb through the start of the second quarter, leading into the spring shipping season. Long haul capacity still exiting the sector. I had a look at the data this morning. We're seeing a slower rate of capacity exit long haul in January than we did in December, mostly in dry van though. I think that's where the majority of their growth occurred in the last 3 years. So I suspect the short-term forecast might be reflecting some of the capacity tightness we're seeing in the more specialised sectors, flatbed, overdimensional and refrigerated. All right, so that's the market update for this week. Remember, dat.com/market update. You can download the long form version tonight. All of the charts that we covered today will also be in the PDF version. So let's bring Evan back in. Evan, one of the questions I wanted to ask you, you've taken a very different and creative approach to solving the truck parking shortage. What are you doing differently to find locations that normally would not be available to truck drivers?
Yeah, so it's really been as we've built the company, really looking at our data, looking at what's coming in and looking at who our best customers are, and really staying in front of them in a lot of different ways, whether that's at shows like the Match Truck Show, whether that is specific conferences for customers that we think are good for our platform. It can also be something, we're very active on social media, on all the socials. We have a good team that runs our socials, and we stay in front of a lot of our customers there. So, we're a marketplace just like you guys, and being a marketplace, being a younger marketplace, we kind of have to be everywhere all the time until we're kind of the go-to truck parking marketplace. So that's what we do every single day.
Right. Yeah, truck parking's been it's been a challenge. I've never really fully understood it. But I guess it's good. The best way to summarize it is that the truck parking shortage, and this is my opinion as someone who's driven trucks and owns a truck, is that when I try to find truck parking, it's generally on very heavily congested freight corridors and at certain times of the day that you find that the parking shortage is a serious problem. Beyond that, I've never had a problem trying to find parking. Where I do find problems is trying to find parking when I'm not on the road. I think that's the bigger issue, is the trying to find somewhere to park a vehicle, whether it be when you're off duty, on weekends, under a load, you want to go home to the family, those sorts of things. I think that's a bigger need for most truckers, but then you're probably solving both of those, right? Or is it more the latter, where you're looking for the more longer term parking piece?
Yeah, I think that's a great question. I think that question comes from a lot of experience on your end, because that's exactly what we see.
Right.
So as everyone knows, right, freight moves, therefore truck parking demand moves and changes across the U.S. We have enough locations. We have 240 locations as of today where we can actually watch demand for parking move across the U.S., which is pretty cool to see. And ultimately, that movement of demand, we believe, is the freight moving to certain areas, congested areas typically, and there is a demand for that overnight parking. But then also there is another segment, which is weekend parking, which is I need to drop this trailer for 4 days, dropping hooks. I need to leave my tractor trailer here and fly somewhere beside parking beside an airport. So there's a lot of different cases that aren't ever really talked about that are needed just as much as the overnight parking. And I would say, on an overnight basis, that demand shifts across the U.S. just like freight does for truck parking. And I would say it is a super interesting concept that it sounds like you've thought about a lot. That certain times of day, there is not an issue in the majority of the U.S. But in the evenings, typically, there is a strong demand in certain corridors, depending on where freight's moving at that point in time.
Yeah, it was fascinating. I looked at some data at a prior company. We looked at all the telematics data we had on our trucks that were running on ELDs. This was about 4 years ago, and we studied when long-haul truckers would typically finish their 11-hour driving shift. And what we found was that there was a noticeable decrease in activity, drivers starting their 10-hour break around the 4:35 p.m. mark each day, and they're only rolling on average about 6.7 hours. So if you think about active, rolling time and productive mile making time of the day, they were what we found was that they were pulling up relatively earlier in the evening, trading off rolling time so that they could find a parking spot. And most of that was sort of in the before dark, and there was a skill component to it, where drivers would, and I could see that for younger drivers wanting to find a spot, or newer drivers to the industry trying to find a parking spot during daylight hours was the bigger issue. And as most that have driven trucks will know, it's not easy to back a 53-foot van into a tight spot in the dark. So I can see why they were doing that, but it sort of emphasised the point, though, that truck parking, the shortage is confined to a very tight window during the day, and it's a problem for the parking or the truck stop areas, because they want to increase throughput, not necessarily their footprint. So because when you go into most truck stops during the day, there's a lot of wide open empty spaces, and I noticed there's a lot more of them are having the book in advance pay parking areas, and it's creating a lot of I think a lot of angst and frustration from a lot of truckers who want to pull in and just find somewhere to park. So it's a serious issue out there on the roads, but I think it's confined to a certain time window. So talk about, on your website, you have hosts. So talk about hosts, how you might connect, because it's not dissimilar to what we do, helping shippers and brokers and carriers connect in a marketplace. How do hosts that have property find you to make their spots available?
Yeah, so I think that's pretty similar to that original question. Is people find us, hosts, which we call property members, find us, all across the web, whether it's social media, articles, podcasts, etc. They also, we'll meet them at various conferences and shows and things of that nature. But when they do hear about us and go to truckparkingclub.com, we have a button that says become a property member, and then it walks them through the process of adding their property, which we've made very, very simple. We have a thorough approval process, but getting your property submitted for approval is a very simple process, and we have new locations all across the U.S. submitted every single day.
Evan, what sort of properties are attracted to the Truck Parking Club? Let's get aside from the typical truck stop parking area. What sort of places might pop up on the radar that we're not normally thinking about?
Yeah, so we welcome, trucking companies with extra space in their yard, truck repair shops, tow truck companies, CDL schools, self-storage companies, anything that is in and around logistics, tangential to logistics, that has spots that are suitable for truck parking, we'll put on our platform. And we do that through our approval process, making sure that it is in fact suitable. But really anywhere that anything from a bobtail all the way up to a tractor trailer can fit at a location we're interested in putting on truckparkingclub.com.
Do you have any sort of minimum requirements in terms of access or security from the properties?
No, we have locations that are 24/7, security, electric fences, the works, right? And then we also have locations that are empty lots that are just suitable to drop a dry van or something of that nature. And then we have everything in between. And what we found is there's a need for all of it. It's
Right.
not just a need for high security, 24/7 security. There we have empty lots that do very well because it's serving a need in that community, specifically. So I think my mind about the business has shaped as the business continues to grow, because I'll kind of roll that into, we have locations in rural areas that you would think these will never
Mm.
have demand, and I've been completely wrong about that. Because what we found is peace of mind is worth something to a driver, rather
Yeah.
than if they're
Right.
in a rural area and they park in this gravel lot, they don't know who owns it. And what's that worth to wake up to a boot, or wake up to a tow truck driver knocking on your door, you
Mm.
know,
Mm.
demanding money or whatever, and then predatory towing at this point has gotten out of hand. So
Mm.
we have a little bit of everything on our
Mm.
platform.
Yeah, there's a famous truck stop in Alabama, I think, that's famous for booting trucks. You can only got to be there a few minutes and they'll whip by and put the boot on. It becomes quite
Yeah.
expensive and frustrating. That's more the temporary parking. Evan, is there a particular part of the country that you're seeing a lot of growth in truck parking need?
Um, I think LA is just constant
Mm.
demand. I don't think that's ever going to change. That's been the case for a long time. I would say it seems like to me that Florida has, anything Central Florida and South has a pretty big issue. Um, we're working hard to add more locations in you know Central Florida and south of down to South Florida. It seems like there's a constant
Mm.
issue, especially along like southeast of
Mm.
Florida. I think that's one that doesn't get talked about a ton. I mean, you hear about Miami all the time having problems with parking. I don't know what you even do about that, because there's just not any space. But even up the coast, I think it's quite a
Mm.
problem that we hear about a lot. I would say, um, the port cities have kind of always been a problem, so it's not really any revelation, me
Right,
saying that. So
right,
that's the one I think about a decent amount of those is Florida.
right. Do you think that's because the population density is confined, especially the trucking community, to a couple of interstates that run north south? Like you've got
Yeah,
4 and 95 on either side. So
yeah. I mean, I
I
think you
think,
have this very interesting dynamic of, it's a very long state,
mm,
and
right,
you may have to run the whole state, and they
yeah,
can only drive so many hours, and
right,
there's only so much space. So you have this really
right,
interesting thing happening there.
yeah, yeah,
And it seems like it continues to grow.
yeah,
So um, yeah.
yeah. Come back to California. Community community acceptance, right? So a lot of people want trucks away from areas where drivers might try to find a park. So a truck parking location like yours is a great idea. Any restrictions around things like idling if drivers were there temporarily? Are you finding any pushback from communities where a truck parking area is suddenly opened up?
To date, 240 locations. We park thousands of trucks a month, and we don't have no idling complaints. I think the reason for that is that all of our locations are in some way related to logistics.
Right. Right.
We're not taking a vacant lot up against a nice suburban community and stacking trucks there or anything like that. So I think that's why we've had really at this point minimal to zero issues with any of that type of stuff, which is extremely common in the truck parking industry, having issues with
Right.
NIMBY and things of that nature.
Right. Right. I think it's an exciting concept. Of course, we'll be at the Mid-America Truck Show coming up at the end of March. I think you said you've got a booth close to us. Is that right?
Yeah, I think it's like extremely close. I'm thinking maybe you guys are right beside us. So last year we had a booth right there at the entrance of the West Wing, and now we are parking our van in that booth this year. And then, which our booth, like you were kind of across from us, maybe like 20, 30 feet. And now we got a booth on the other side of that as well. So I think our booths may actually touch, but
good. Great.
But yeah, it should be a great show. It was an amazing show last year, and I would imagine that it's going to be amazing again this year.
Yeah, the registration numbers look pretty good already. I know they've already sold out of parking spots for the show trucks outside, so it looks like being another bumper year, which is great after the COVID shutdowns and all of the disappointments there. So look forward to seeing you there. All right, so that kind of brings us to the end of our show. I'll come back to you in a second here. We've just got a couple of announcements to make, Evan. Don't forget, we're on Landline now, 7 p.m. on Sirius XM. We've got our Freight Vine podcast, Rob Kelly from Forum Mobility, talking about zero emission drayage. The DAT team's going to be in the Dallas-Fort Worth area, February 20 to 22. We're doing a tour, talking to our customers. It's our special in-person office tour, Dallas-Fort Worth, February 22. I'm starting a 6-part series on sleep, napping, and driver scheduling in my blog post that started this week. Catch that on our website tonight. I think that's about it. Next week's show, we've got Larry Gross from Gross Consulting. He's going to be on our show. He's our intermodal market expert. We'll be talking about, in particular for shippers, what the intermodal freight market looks like. Before we go, Evan, how can people get in contact with you and the Truck Parking Club?
Yeah, so you can go to truckparkingclub.com and you can go to the contact us page there. We also have all of our socials on the foot of our website. We're on really everything: LinkedIn, Facebook, TikTok, Instagram, YouTube. So you can reach out to us on there as well.
Okay. All right. Thank you. Have a great week in Las Vegas. Everybody else will be back here at 10 a.m. Eastern, 7 a.m. Pacific for another market update next week. Ken will be back with us and Larry Gross will be here also. Have a great week, everybody.